What's going on, guys? It's Stas here. Welcome back to another video. As you guys read on the title of this video, I just wanted to go over the top 3 stocks that I'm looking to trade in the second week of July in 2018. And for those of you guys that are new to my channel, my name is Stas and I focus on making videos dealing with swing trading, day trading, long-term investing, and pretty much just my philosophies and strategies in the stock market. So for those of you guys that are interested in learning more about the stock market, trading, investing, feel free to drop a like, leave a comment, and subscribe, and let's get started with the topic of this video. So the first ETF we're going to be looking to trade this week is DGAZ, ticker symbol DGAZ. And for those of you guys that don't know, DGAZ is an inverse ETF. Its inverse being UGAZ, ticker symbol UGAZ. And these two ETFs, they trade based upon /NG, or the natural gas commodity. And pretty much, guys, whenever natural gas is going up in price, DGAZ is going down in price. But whenever natural gas is going down in price, DGAZ is going up in price. And if we look a little bit closer on this natural gas chart, we can see exactly why I'm going to be trading DGAZ. Pretty much, guys, before I even get into that, we see that natural gas was on a it was on an uptrend pattern over the past 180-day on this 180-day 4-hour chart, right? It's been on an uptrend pattern, creating higher highs, pretty much riding the EMA line and the SMA line. But what we noticed here, guys, in the past week or so, that natural gas has pretty much broken the channel it was on from between $2.90 up to about $3, $3.02. And what this means, guys, since natural gas broke this support level at about $2.90, and now it's getting rejected by the EMA line, right? This could mean that natural gas is starting to form lower lows now, right? It's starting to, go on a downtrending pattern, right? And if we look a little bit further out here, we can see that illustrated a little bit better. We see over here, when it was on an uptrend pattern, it was riding the EMA lines, pretty much riding the 50-day SMA line all throughout. But once we see, when we look a little bit closer, like right about here, we see the candlesticks took a hard dip. If we look a little bit closer, the candlesticks took a hard dip below the EMA line, right? Below the 50-day SMA line and below the 180-day SMA line. And instead of the EMA line acting as a support level, meaning the candlesticks are bouncing above the EMA line, now they're pretty much trading below the EMA line, and the EMA line is acting as a resistance level. And natural gas has been creating lower lows now. And how this correlates over to DGAZ and why I'm going to be trading DGAZ for this upcoming week is because DGAZ, as natural gas is trading below the EMA line. Now DGAZ is trading above the EMA line. And sorry for my voice, guys. It's cracking. I'm kind of sick right now. I have a little cold, but I still figured I would record this video for you guys. And anyway, DGAZ now is riding the EMA line, right? And this 50-day SMA line is starting to point up, and it's looking to cross over the 180-day SMA line, and this indicates a good buy point, right? A good buying opportunity whenever the 50-day crosses over the 180-day. And all signs right now are pointing that DGAZ is starting to form an uptrend pattern. Right, it's technically already uptrending, but it seems like, the way natural gas is trading and the way DGAZ is looking to start moving now, DGAZ could, shoot up to $27, $28, who knows, as natural gas, keeps going down in price. But pretty much, guys, that's what I'm going to be looking at in particular with DGAZ is, if natural gas keeps going down in price, I'm just going to keep scaling into my DGAZ position. And pretty much up to previous resistance levels, we can see, the first one here, we can see it's right at about $25.60. And, for those of you guys that don't know, previous support levels like these ones right here, at about $25.50. Once they're broken below, like we saw here, obviously it broke below that, the previous support level becomes a new, resistance level. So that's the first resistance level we're seeing here. And from where we're at now at about $24, if we go a little bit closer here to the 5-minute chart, actually, let's go back. Let's go back from about $25 or about $24.10 up to that resistance level, that first resistance level. It is about 5% potential for profit. And like I mentioned in previous videos, my weekly goal is 5%. So that's why I'm really eyeing up DGAS this particular week, and that is why I'm looking, to trade it. So the second one we're going to be looking at for this week is LABD, and LABD is another inverse ETF, and I kind of mentioned on this channel that I don't really like trading downwards patterns here, but why I'm looking at LABD for this week is because it's inverse, which is LABU. If we look over to this one, we see that it's actually approaching a common resistance level at about $110 to about $115. We see here, guys, about 2-3 weeks ago, it actually topped off at about 115. A couple months back, it topped off at about 115. And actually, a couple months back, it actually also topped off at 110, as we can see right here. And for those of you guys that don't know, LABU and LABD, they trade based upon SPS IBI, this particular, S&P Biotechnology Select Industry Index. And if we look at this index, guys, it's obviously on an uptrending pattern over time, right? And I traded LABU as, this particular index took this big dip, right? And then it started to bounce and hold above this 180-day SMA line. And that's when I ended up taking a position and profiting on LABU. But now that it's approaching, recent highs at about 7,800, it's already at 7,800. And we see a recent high here was at about 7,900. I'm shifting my, focuses over to LABD. Although LABD does have a little bit more to drop, in my personal opinion, because like I said before, this ETF is downtrending over time, meaning it's creating lower lows, right? And I usually stay away from these, but I've had success with LABD before, and I know the pattern and understand it. Even though anything could happen, right? I'm a little bit more comfortable trading LABD than other bear ETFs in the market. So now we see it, LABD's at $22. I do see it falling down to maybe like $21, at the lowest, because like I said, it's creating lower lows over time, and it usually creates a lower low each time. So we could see it fall to $21. And another thing that I like about LABD is that its RSI, the relative strength index, is showing that LABD is completely oversold right now, right? And for those of you guys that don't know about the RSI levels, we see these candlesticks, or not candlesticks here, we see this chart, right? And we see these ranges from 70 to 30 here. And pretty much what this means, guys, is that whenever these lines are going up towards 70, that means that stock or that ETF is overbought, meaning a lot of people are buying it, and that might not be, the best opportunity to put money in there. But if it's more towards the 30 level, and especially under 30, that means the stock or the ETF is completely oversold, meaning that, okay, this could be a better opportunity to, hop in and make some money. So, like I said, LABD could go down to about $21, and, up to previous resistance levels, we can see the first resistance level is probably at about $24. So from $21, right, let's say we got in at about $21.50, up to about $24 flat. That's about 12% potential for profit, right? And this one does offer about 8 to 12% potential for profit, from about $23 to about $24. And that is good. Obviously, that's double my weekly goal, and that is something that I really like to look for in terms of picking out stocks and ETFs for the upcoming week, which I do every single Sunday, and that's what I recommend all my viewers out there and everybody that's trading and investing in the stock market. Really just take time on Sunday to pick out the stocks and ETFs you're trading, create a plan, etc., etc. So that's what I'm doing with LABD. Just to recap, guys, LABD, the what it trades based upon, it's reaching a resistance level, and last time it hit this point, it saw a big drop. Although it is on an uptrending pattern, and maybe it could shoot up to the 8,000 level, it's still going to experience a pullback eventually. So if it does shoot up to here, guys, I'm just going to be waiting for that little pullback, and that little pullback will offer, some profit to be made on LABD, being the bear ETF. So that's what I'm doing with LABD, and that's why that's the second ETF that I'm trading this week. And another one I figured I'd mention in this video is DRIP, ticker symbol DRIP, and this is another inverse ETF. This is actually the bear ETF out of the two, and its inverse is GUSH, ticker symbol GUSH. And these two, they trade based upon XOP, which is an S&P oil and gas ETF. And whenever, this particular ETF is going up in price, right? Gush is going up in price as well. But whenever XOP is going down in price, DRIP is going up in price. And what we can clearly see here, guys, on this XOP graph, and I did talk about this in my previous video, so I'm going to just talk about it very, very quickly on this video again, is that we see that, okay, XOP, it's been on an uptrending pattern over time, which is what we like to see, right? And we've been pretty much trading this particular channel here over the past month or so. We see that it's been creating higher highs, right? Meaning that, again, it's on an uptrending pattern. It's riding that EMA line, and it's pretty much been trading in this channel that I've drawn out here with, these particular trend lines. And what we can see here, guys, is that I was able to make, for those of you guys that, watched my video last week, I was able to profit on Gush from this particular bounce point up to here on a day trade, and I also traded it from here to this point as well, right? And now what we can see is that, XOP still has some room to fly up to about $44, but why I mentioned, DRIP in this particular video is because if XOP does shoot up to, let's say, $44, right? Which it could if it does continue on this particular channel, right? And, it starts to top off here because at that point, the RSI levels will be at the, overbought territory. We would expect a little pullback from XOP if it does have a green day and if it does open up green tomorrow, which in my personal opinion, it can go either way right now. It's pretty much 50-50 because we're kind of in this middle ground right here where there's still some room to shoot up, right? But it still could, have a little bit of a pullback, maybe back to about the 42.50 range before it starts to shoot back up again, right? Because we know that crude oil is on an uptrending pattern over time, /CL. Gush has been on an uptrending pattern over time. And pretty much the whole idea here, guys, is to just trade the ins and outs of XOP, with the inverses in DRIP and Gush. So what I'm going to be doing, I'm going to be more patient with this particular DRIP trade. If we do open up tomorrow a little bit green on XOP, then we start to experience a little bit of, some consolidation and some pullback action, right? That is when I might take a little position in DRIP. But again, a small position because over time, DRIP is a downtrending ETF. And with these guys, like I mentioned in earlier videos, I am way more cautious with these instead of, trading, the bull ETFs like Gush, LABU, ones that are on, on uptrending patterns. I'm way more cautious with DRIP, LABD, all the bear ETFs that I trade, and I typically take smaller positions at first with those and scale in, over time like I usually do. But with, with the bear ETFs, I'm maybe even putting down like 10%. So if I'm taking, a $3,000-$4,000 total position, I might only start out with like a $400-$500 initial position and scale in with that amount of money, with that increment of money. So that is what I'm doing with DRIP. And if we do look a little bit closer here, guys, it did consolidate pretty much all day on Friday. And if we try to find out how much potential for profit this one has to offer, from about 580, let's say you waited to get in at about $5.90 up to previous resistance levels at about 630. That is a 6%, potential for profit trade. But like I said, I do see this one falling down, maybe back to the 550 level. And if we get in at about 550 up to, previous resistance levels would be at about 605. That offers about a 10% potential for profit. So DRIP is probably the last out of these three ETFs that I'm going to be trading this week. I'm going to be extra patient with this one because, again, guys, it is a little risky since it's a downtrending ETF over time. But again, patience is the name of the game here if we're trying to, be consistent over time trading and investing in the stock market. So that's what I'm going to be doing this week. The three I'm watching are LABD, DGAS, and DRIP. So I hope you guys enjoyed the video. Feel free to drop a like, leave a comment, and subscribe if you did. Follow me on Instagram if you guys want to see my profits, trades I'm taking throughout the day, updates to my YouTube channel, things about my personal life, and just random stuff on my stories. The link is down below. I would love to have you guys in my community. And again, make sure to do your own research and due diligence when it comes down to investing and trading in the stock market. Do not trade, buy, sell any stock based off of my opinion or anybody else's, because that's not how you're going to become a self-sufficient trader over time. So hope you guys found some value in this video. Let's make some money today, guys. Peace.